behalf of our commissioner, I want to inform you that business licenses can be processed where applicable by visiting www.chicagobusinessdirect.org. Beginning Tuesday, July 6th, all BACP offices are open to limited members of the public. Please be advised that masks are required in all BACP facilities and 6 feet of social distancing must be maintained at all times. While offices are open to the public, we continue to strongly discourage in-person visits. If you are part of the BACP Entrepreneur Certificate Program, you can get credit for this webinar by sending an email to bacpoutreach@cityofchicago.org. I will put that email in the chat. If you want to learn about the program, please visit chicago.gov/business-education. Also, if you want to receive targeted emergency alerts for business community by opting into Shy Biz Emergency Alerts. If you are interested, please visit chicago.gov/Shy Biz Alerts. We encourage attendees to ask questions. Please use the chat box and send your questions to all panelists. Now, today's webinar, Growing Your Business and Knowing Your Business Value. I turn it over to our presenters, Paul and Morgan.
Thank you everyone for being here. This is awesome to be able to do this with you this morning. Like I said, it'll be actionable ideas for business owners. On the far left, that's me. I'm Paul O'Connor. I was actually a customer at WestPoint Financial Group before starting to work here, and I went back to school for finance, and they decided to hire me because they liked me so much. And I actually did the small business program in 2019. So I did the 9 classes, went to CIBC Bank, had a business plan, and they gave me my line of credit for a Cubano business, which is in the middle. That's me and my wife selling Cubanos and cold brew coffee at the National Street Market. And I'll hand it over to Morgan.
Awesome. Thanks, Paul. Morning, everyone. As Paul mentioned, my name is Morgan Lougee. I'm also an advisor here at WestPoint Financial Group, and actually was Paul and Lauren's advisors before he joined us. So obviously really excited to be here today to present a little bit more about, how you can grow and develop your business, as well as understanding the importance of valuing it. We'll be taking a couple breaks to answer questions. So as Geraldine said, please throw those in the Q&A and we'd be happy, or in the chat, and we'd be happy to address those as we work through the presentation. Just a quick disclosure, no tax or legal advice given here. This is just kind of a general information thing. We won't be talking about anything specific. It's really just kind of an educational seminar to help and benefit all of you.
Right, and we're going to be going through leading your business, and basically these are going to be actionable ideas to use to start and grow your business from the ground floor. Very just straightforward. Everything I actually learned in the seminars, we're going to be talking about a lot of that too. Leading your business, vision, planning, and direction setting. Be aspirational with your business. When I worked at the Dawson and the Gage, 2 of the biggest restaurants in the state of Chicago, they sat me down. They're like, the owners are from Ireland. They owned a place up in Wrigleyville. They sold that. They bought the Gage. They gave me the vision, the story, everything behind it. And when you start your own business, do the same for yourself. It helps, answer the why, and your clients are going to want to know that, and your workers are going to love sharing that. And always set 3 goals. 1, the potential is like a stretch goal, it's going to be kind of hard to get. The possible, it's a little bit easier, and then the practical. And I do that every day. When I make cold calls, I'm like, all right, how many cold calls can I do? When am I going to get done? How many people am I going to reach? And every day, organize yourself. Every day I wake up, I look at my schedule, I see what I have to do. I even have my budget on my fridge. I'm all like, all right, I'm super organized. Next. Moving the business forward. Create a business board of advisors. When I started the Cubano business, I was a server for 20 years. So I know how to talk to people. I know how to make people feel good. I know how to get the food to that table most efficient and correct. But I have never made a Cubano on an actual flat top grill. I didn't even know what to buy. So I called my buddy Jason, and I'm like, dude, I don't know any chefs. So he referred me to this guy named Ryan. I called him up. I paid him $50 an hour. He sat there with me the first day. He went and picked up the equipment with me because I wanted to make sure I did it right. Eliminate the things that can stifle innovation. Rid the business of organization silos, complacency, and lack of diversity. Like, basically, what that means for me is have as many people from different regions of the world in your place. Listen to people, listen to their experiences, because everyone has value to bring to your company. And give the team permission to fail. Like, I fail every single day, and I learn from it. I always, like, it's so funny. It's like I can read a book, see how to do it, and then it's just like playing a guitar. I just keep messing up until I finally get that song.
Awesome. Yeah, definitely just to add on to that, really changing also sometimes the way that you're measuring yourself so that you can always have those wins every day. Starting a business is a little, or can be lonely. It's definitely very challenging. So a great way to kind of reframe your mental mindset is making sure you're able to, have those wins every single day. And just, again, modifying those metrics that you're measuring yourself is a great way to make sure that you're doing so. The other thing, obviously, all going to run into problems. Need to understand what's coming. So taking some time and thinking about the business itself, including not just what you want to do, like Paul was talking proactively with those goals and measurements, but also how could you be affected by external and internal factors. So making sure you understand the competitive marketplace, and then your customers as well, what they're looking for, understanding their needs and developing, your business and maybe modifying it to make sure that you're always meeting those. Additionally, kind of make sure that, if you do have employees or partners, that you're bringing kind of the skill sets and the knowledge that you have to the table, and you're taking advantage of those things. So that you're continuing to build and grow the business by leveraging all the resources that you have. And then lastly, just having a backup plan. Things can go wrong. A global pandemic can happen. Always having a backup plan or a second option, or knowing how you would handle things if certain circumstances were to arise is super important. And then obviously, staying connected with your team or your partners. It really always making sure that you're doing the things that you have done, or you are doing the things that you're asking your employees to do. Definitely helps them understand the value of it, and you're not just some person kind of in an ivory tower kind of directing down on things. I think people always respect and appreciate that involvement from a leader. And then making sure that you're, again, leveraging their critical thinking and decision-making skills. You have hired these people because of their talent and their skills. So making sure that they're able to make decisions at the appropriate level, and that they're, they understand that they're able to do that, and they're not just kind of some cog in the wheel. Additionally, kind of, throwing off bad ideas. Don't just kind of knock something just because it seems like a bad idea. Making sure that you're talking through those things, and to build on that, making sure that you're carving out time on a weekly basis to actually think about, the business from a strategic standpoint, and not just getting bogged down with the day-to-day every day, which is very easy to do. The other piece, super important, obviously, stay grounded. Making sure that, thanks. Being generous, making sure that you're open to, feedback, and as well as any opportunities that may come your way, even if they don't sound great when you're first, hearing about them. Kind of like I was talking about earlier, redefining how you're measuring success or your different metrics. So really, that's not the end all be all. It's kind of a variety of different elements that go into that. It's not necessarily the dollar amount that you're making, but the lives that you're impacting, or the people that you're making happy, or things like that. And then also just, always kind of taking time to give back and pay it forward to others that maybe are starting their own business or, need a little assistance, always great. Always feels great to, be doing that for your community and for others around you. With that, just wanted to see if we did have any questions on the leading. I don't see any on there, but if you do, again, just throw them in the chat or the Q&A, and we'll be happy to do that at each of these kind of section breaks. So next we're going to talk about, just growing your business. So the first, obviously, element, just starting out, and then it's, what's next beyond that. So obviously super important, and I believe you all are working on this as part of this process, but making sure that you're planning for the future with a written business plan. If something is written down, you're much more likely and able to achieve and put in actions into step to get there. A big thing is the SWOT analysis, so strengths, weaknesses, opportunities, super important. And then looking at who your business plan is going to impact internally and externally, and then who you need to engage with on those certain items. We can't obviously do everything ourselves, so always nice to make sure that we are aware of the other parties that are going to be involved in getting our business to where we want it to be, and making sure that we know who they are, we understand what their desires and their goals are, and then that way you're a little bit better prepared to sell yourself or the business to them. More of a much longer term thing, but some people are serial entrepreneurs and like starting the business and then maybe selling it a couple of years later. Some people want to have it forever, but regardless, at some point you will be selling the business, likely, whether it's or giving it to family or friends or something like that. But just having an idea with where you want to be a little bit further down in the future, and making sure that you're taking the steps to get there. Super important, obviously, is managing the finances. So much like you may be doing for your personal finances, definitely, you have to think about the business as a completely separate entity, and manage the finances for that. So cash flow is a huge thing. Very important to be tracking kind of money in and money out and where it's going. And that way you're able to make sure that you can better manage maybe expenses, see where your most profitable or most revenue generating activities are coming from. And that way you can optimize, those items and reduce the maybe wasteful or waste in your spending that you've got. Always nice to have a great little buffer with an emergency fund so that you can weather kind of economic or, seasonal or however your business is kind of impacted or could be. Just making sure that you've got that, and you don't have to close the business because of a short stretch of reduced revenue. And then obviously credit is super important, maintaining that good debt to assets ratio, as well as obviously paying your bills on time and being good stewards of kind of the financial ongoings of your business. With that, I'll flip it back to Paul.
All right. Thank you, Morgan. That was awesome. Budget every penny. Like I said, I literally have me and my wife's budget on the fridge. I look at it every 2 weeks, make sure we're on course. Well, I love numbers, so any reason to add numbers together. But it's just as important to do that with your regular business. And if you're not doing that personal, get going on your regular, and then let's get that moved over to your personal and do it on both ends. Manage your expenses. Identify one expense, tackle it, and move on to the next. And the best way for me to explain that was, when I was younger, I was really sick, so I had all these medical bills. I just looked at one bill, tackled it, moved on to the next. But that created a habit, and that's how I handle my bills with my businesses too. Make it easier for customers to pay you. Yeah, I mean, I'll do quick pay, check, cash for my other businesses. If I could take Bitcoin, I would. And don't make it super complicated, the process either. And define your audience. I mean, who do you want to sell to? I mean, that's a really good question. Not everyone wants to buy the same thing. You know, maybe you should go around the neighborhood and ask the neighborhood people, like, what do they want in there? They might be like, hey, there hasn't been a dry cleaner here for 20 years. We need a dry cleaning place. We don't need another coffee shop. And then when you figure that out, who do you want to sell to? I mean, how do you want to reach them? Nurture your prospects, join the conversation they're already having, and then make the sale. That's my favorite one. Basically, don't make it super complicated. Just make it streamlined, easy as possible. I mean, I love to overcomplicate things, especially I'll be like, here's 25 options. They're like, we asked for 2. I'm like, so take 2 away. So just make it streamlined, make it easy, give them 3 options, keep it simple.
Awesome. So obviously, as you probably all know, it's a lot easier to maintain a current customer than it is to acquire a new one. So super important to make sure that your current customers are happy, and that, again, you kind of have your ear to the marketplace with how their needs and wants may be changing, so that you can continue to tweak and refine your business so that you can grow with them. Similar to kind of what was discussed before, make sure that your team members or your employees are able to handle problems and solve, and they don't have to go to you on every single item. Obviously, this is kind of important on different levels depending on how big the problem is. So, but that they should know that small items they can handle. Big ones, are items that bring a manager or maybe you as the owner involved on. And then another thing is, people just want to be seen and heard. So I think a great way, especially with social media, whether you like it or hate it, it's a nice way to kind of share any appreciation for your customers on different social media platforms. And maybe if they're sharing your stuff, resharing that on your business Instagram or something like that, dependent upon what type of company you're running. Always important to do something like that. It's always a nice way to kind of make them engaged and make them feel good about buying from you. As far as growing, it's super important to make sure that you're always on some level thinking about how can we do this a little bit better, a little bit more efficiently. How do we need to change anything? So having those metrics, like we talked about a little bit before, knowing where your money is coming from, how productive things are. So with that, kind of that next step is to having good data is setting goals around it, and where do you want to be, and make sure that you're operating efficiently. And then what can you do to make things run a little bit smoother by setting target goals, and make sure that they're time bounded as well. The other piece is actually writing down various processes, again, dependent upon what business you're running and how complex it is or simple. It's super important to have a set activities and processes written down, so it also makes training easier. If you've got employees, likely that at some point they may leave, you'll bring someone new on, so always easier to have that content ready so that they can you can easily kind of train someone, versus all that information stuck in one person's head, and then if they leave, you kind of lose all that intellectual capital. And then the other piece, like we talked about, is just capturing that information on a regular basis and taking the time out to make sure that you're reviewing it, setting those goals, and figuring out ways that you can kind of continue to work on and improve the business. We do have a couple of questions, so just looking at that. So talking about being seed and self-funded so far, haven't given any equity, and obviously a little bit hesitant to do so. So thinking about potentially going from an LLC to a C Corp and then issuing stocks. How would you navigate the best way to decide if long-term someone is worth equity? Probably a combination of art and science there. I would definitely think, I think it's one of those things of making sure, one, you're comfortable with giving away a portion of the business. I know some owners aren't. and how much that is. I think that would probably be the first step. And then obviously building that relationship with them and getting to make sure that you understand, know, and trust them, and that they have similar goals and targets in mind as you do. And really someone, again, that also kind of adds value and makes sure that, you know, they're bringing something significant to the table to help grow the business. So I think those are some key items to think about when, you know, potentially giving someone some ownership equity. So I think that's probably like a longer term process for sure, to make sure that, you know, it's like any relationship, making sure that you really can know and trust who they are, and that, you know, giving away a portion of your business to that person, I think is super important. So next question was, when establishing a proof of concept, how long it typically is required before we can qualify for round 1 funding for expansion, 6 or 9 months? This one, I apologize, I don't have a great answer for that. I do work with a lawyer that does help with funding for businesses. So Michael, I'd be happy to connect you with that person, and he might have a much better answer for you on that one. So if okay, we will get your contact information, I believe, and we can reach out after this call today. All right, sorry, I'll flip it over to you, Paul.
Right, inspiring your team. This is one of my favorites because I've always been a lead trainer at every restaurant I've ever worked. So I've trained tons of people, and hire for potential, not just experience. I love it when someone's like, I just moved from Nebraska. I've never made more than $10 an hour, and I just want to be here and try the best. I'm like, I'll take that person over anyone that served tables for 20 years in downtown Chicago, because I can teach skills. I cannot teach passion and hunger. And those are the type of people I look for in my business and in the restaurant industry when it's a little bit different. Strive for consistency and fairness. Yeah, just treat everyone the same. This, have, like Morgan was saying, have the rules written down, have the procedures written down, have them accessible. I mean, always have everything handy and ready to go. And just keep it uniform across all employees. I mean, right now, I know you guys are just starting up. This is a small business program. Like me and my wife, we're doing the markets, just me and her. And we're going to break even this year, which I'm super happy for. Breaking even is cool for first year of doing something. But we're going to do 3 markets next year. So I'm going to have to hire people, and I'm going to have to implement the same stuff right here. And measure employee engagement. Reward your leadership team for employee morale and retention. Yeah, I mean, that's super important nowadays too. I mean, it's so hard to find workers right now. It's been kind of crazy. People have valued their time differently now since the COVID. They're at home more with their kids, which is awesome. I love it. So how are we going to reward those employees that are going to keep away from their family and spend time at your shop or your company?
Perfect, thanks, Paul. As we kind of previously mentioned, documentation of your various processes and steps, and as well as at a high level, that vision and mission and kind of value statement. Again, people will get behind the why. If you think about brands, those large brands, everyone can come up with the names that really kind of stick in their minds, and it's typically because they express and sell based on their why. They don't tell you what they do. They don't tell you how they do it. It's just it's just why they do it. And I think that's a super important thing at the top level, and then down at the more granular level of just making sure that you do have those items documented. And again, when you're bringing on new people, or if you're not there you're sick for a day or something, or you want to take a vacation, people should have reference points to know how to do their job easily. The other piece is don't spend too much time over kind of explaining or over maybe over training early on. So this 7-20-10 rule when it comes to training states that about 70% of people's learning actually happens from on-the-job experiences. We've all been there. Maybe you go through a training experience and then, the job is kind of completely different than what you think it's going to be, or you're just like, I don't know what I don't know what I don't know now. So about 70% will come from the actual experience of doing the work. 20% comes from interactions with other people, not like a formal lead. And then really only about 10% of the actual skill development or training development comes from that formal, formal education training experience. So again, kind of having that be an ongoing learning and back to that continuously improving concept. Don't overdo it too early on, and make sure it's just an ongoing training and skill development experience. If you are in an organization where they need to bring or they need to use a laptop or something, nice to make sure that people have options, or make sure that they know how to use the machines, or why a specific type needs to be utilized is always helpful. Kind of what I was alluding to earlier, just having that company culture and your vision and things. People love to be part of something bigger than themselves. So if you're able to create that for your employees, always super helpful to do that, rather than people just kind of coming in and not really happy to be there. So making sure that they know what they can own for themselves, employees, and what is kind of more important to be bubbled up, or that would need a leadership person to be brought in. Getting their feedback, people, as you grow and build your business, or if you're already there, really important to make sure that again, your employees feel heard, or your partners feel heard, and that they're able to kind of provide their input, especially again, as things continue to change or technology may develop. Important to make sure that we're leveraging those who are actually doing some of the work, and getting a better understanding of maybe how they think we could do it a little bit better. And then again, we're all human beings. It's always, and I think lessons learned over the last couple of years, is really important to make sure that people have a share or a sense of themselves, and are able to kind of pursue their own activities and hobbies, or volunteer work outside of the office. Obviously makes for a much happier and more productive and engaged employee group.
Inspiring your team. All right. I mean, protect your employees today, prepare employees for tomorrow. I mean, really just as a business owner, it's your job to make your employees, your vendors, everyone feel safe and comfortable, and just have a good work environment. Also, studies have shown that when you take care of your workers financially, they're happier, they work harder, and then that gives more profit for your business. So, I mean, just every business I ever worked for, and I've worked mostly with small businesses as an employee, was the ones that gave me those bonuses. They gave me those days off, that had a really nice open door policies. I was just happier, just from my own personal experience. So, I mean, just treat people how you would want to be treated, for sure.
Absolutely. And someone threw out 4-day work weeks. I think there are actually some interesting studies and experiences out there where countries or different companies have tried and looked at shorter working weeks or hours, and found that people actually end up being a bit more productive than the standard 40 to 45 hour 5-day work week. So definitely a cool way to try that, and obviously employees would love that, and who wouldn't love that as an owner as well. So just kind of wrapping all of those up, excuse me, really just those 3 components for developing and working on building a successful business. Obviously really important to make sure that you're in that leadership position, and that you're carving out the time to make sure that you are building it, or knowing kind of what the data is saying about the business and how things are going, and getting feedback from your employees as well. Really important, again, to have that plan written down, and understanding what your metrics are and how you're measuring them, and then setting those targets to continue to improve and hopefully grow the business. And then, like Paul said, treating others the way that you would like to be treated and just kind of setting that positive example. That's like the basics of a good leader, is just being that person that is doing everything kind of that they can to support and align their activities with the business values and goals. Perfect. So with that, I don't see any other questions. So what we'll jump into now is valuing your business, and I will hand it back to Paul.
Yeah, valuing your business. And, it's just, why is my business valuation important? What do I do with that information? And it's basically going to be going is like what you personally value the business at, and also what studies have shown what a bit and how you can actually value your business, like on a money standpoint. Next slide. So this is a study that was done by MassMutual, and basically conducted by Hawk Partners for MassMutual Life Insurance. The study reveals today's business owners are thinking about key business plan issues. And the next few slides we'll be talking about will be based around this. Over 900 business owners surveyed, all with less than 500 employees, nearly all in business for 4+ years, so more experienced business owners. Over 3/4 with multiple owners, 78%. Nearly all with family members in the business, 91%. Most with annual revenues in excess of 500K, 74%. Most with household income in excess of 100K, 66% of them.
Yeah, so obviously relatively successful by a lot of standards, businesses and owners there. And a lot of people, do own and operate a business with their family. So just to, like Paul said, to give you a background on that. So really, here's kind of the main pillars of what kind of go into the value, of a business itself. Obviously, there is, the organization, making sure that you've got some of those key items in place, like a business continuation plan or buy-sell agreements for the owners, as well as, how to retain your key employees is super important. Making sure that, you've got all of those items in place. Similar to what Paul had mentioned previously, was helping them achieve their financial goals with some retirement strategies, as well as some protection items in place are again important to help employees feel safe, and that their work is providing some safety nets for them. Really important, obviously, to have that vision and the why, and developing those underneath you, and communicating that out in clear and varied ways. So we're all different learners. Some people are, audio, some people are visual. Making sure that you're explaining and sharing those items in a variety of ways, so that it resonates with the vast majority of all your employees and team members. And then lastly is the family itself. We all have people in our lives or family members that are important to us. So making sure that, the business, or understanding what the business is providing from a, individual standpoint.
I'll start that over. Sorry about that. Thanks. Say that. So basically, about half the business owners say that they have the business valued, but 1 in 4 valued it themselves. And basically saying they didn't hire an outside company to do it. And like I said, you worked hard to get the business. You did 9 sessions with the small business program. You went to CIBC Bank. You dragged all your family and friends in it to help you when you couldn't find workers. I've done that myself. And you're going to have that self-bias, your heart, your emotion, everything's in it. So we're going to talk a little bit about that in the next slide. Yeah, and who does business valuation? I think obviously this isn't going to apply right now. We're just starting, but I love seeing where I'm going. Just like in calculus, I was like, man, I'm doing all this calculus in college, and it's great. I'm like, what's the point of this? And my teacher said, hey, you need to kick a football so high over the goalpost. You need to know the force of it. This calculus, you use it for football. They use this in literally the National Football League. I'm like, oh, this makes sense. Seeing where I'm going, that helps me a lot. So that's why I like to show this. 46% of the people get an accountant firm to do it. 31% of the people get a business valuation company. There's no shortage of that, of either of those two in the state of Chicago. And a lot of them, 25%, like I said before, 1 in 4 do it themselves.
Yeah, and as Paul said, you know, we all kind of we're all a little bit biased. It's kind of like, you know, that sweat equity that we put into something, especially if it's something that you're passionate about or love. And just getting that outside opinion is super important to make sure that, you know, you're getting an accurate understanding of the business and what it provides. So having that kind of partner, you know, whether it be, you know, valuation company or accounting firm, help you do that. So this was kind of some information or study information, excuse me. You know, business owners valuing it themselves sometimes off about 60% and especially once you have a bigger business, those are some pretty big numbers. So we're going to talk a little bit more about the items that go into actually understanding the value that your business is adding, just to help you all be a little bit more aware of the various items. So those 4 items, as you can see, there are human, customer, structural, and social capital, all going into the value of the business. And this last kind of fact, about 80% of the business value can be intangible assets. I mean, think about those massive companies like a Coca-Cola or Apple. How much of that value is actually just the brand name itself? And when you have things like that, that can be pretty incredible, you know, items that people get behind, and just having, you know, that intangible value behind your brand. So talking about, you know, again, value at its base level, the value of your business is any assets that you've got, right? Minus any loans that you may have taken out, or if you've given away equity for the business to, you know, a third party partner or partner or something. That on its basic level is just, you know, what the value, or excuse me, what the businesses has for, you know, net assets. Then if you've got any, you know, protection items in place for the business as well as yourself, those are, you know, again, that next level of making sure that you're protecting the value of the business. That third piece is, you know, as we've talked about a little bit earlier, you know, just looking at where your business operations are, where your profitable items are coming from, figuring out ways to kind of increase those, and then reduction of any expending that doesn't necessarily add value to your organization or to your business operations is important to then building kind of even further. And then harvesting, word, it doesn't sound great, but like, you know, harvesting some of those profit and that value from the business for yourself. So many people just kind of throw all of their, you know, money right back into the business, and aren't extracting any of that for themselves. So important to make sure that, like, you as the owner are working on ways to, you know, pay yourself, and whether that be setting up, you know, a retirement plan for yourself and having the business contribute to it for you and or your employees, or, you know, profit sharing distributions, or you know, increasing your salary as the business grows and you're taking on more leadership responsibilities. Incredibly important to make sure that you're protecting yourself and your own personal finances, and not everything is tied to the business, because as we've seen in the last couple of years, we really don't know what could happen. So really important to make sure that you've got that buffer, you know, for yourself and not just the business. This just goes into buy-sell agreements, which may not be relevant for everyone, but if you do have, you know, partners that person is, probably bringing something really important to the table, and is a significant value factor in the business operation. So if something were to happen to them, whether they wanted to leave voluntarily or worse, something happened, really important to make sure that you are protecting yourself and the business through funded buy-sell agreements. So some of the items that you can see there are just important things to think about when you're navigating those types of items. So make sure you're thinking about all the business owners, all the different types of issues, death, disability, divorce, departure, or maybe you're no longer, qualified, or for some reason can't operate anymore. And being really clear on what those definitions mean. I think the valuation is super important to be doing. I said that a million times, I'm sorry. But making sure that you're keeping up the valuation of the business as you continue to grow, because some people set these up and then they don't look at them for 10 years. And hopefully the business is worth a ton more 10 years down the road than it is today. And lastly, making sure that everyone has signed off on it, everyone knows what it means, and that you're funding it. And there's a variety of ways that you can do that, whether that be owning that risk yourselves and self-funding financially, or transferring that risk to a carrier, which is a helpful way or easy way to cover some of those risks that you've got. As I kind of alluded to, these are usually passion projects or something that you love. So a lot of business owners, again, don't really think about themselves. So about 1 in 3 have not carved or extracted any value or assets for themselves outside of that. And we've seen it, I think it's on a later slide, but seen it time and time again where, again, if you don't know what the business is worth from an external party, you don't know what someone's going to pay you for it. It's kind of like, like a real estate or buying a home or selling a home, making sure that you understand what its value is, and really it's just what someone would pay you for it. It's not, that emotional attachment, unfortunately, does not have any value for an external partner. So again, making sure that you're protecting your own retirement plans as well as building the business. So it's again, going back to that art and science combo, it's kind of a combination of the two, with making sure that you're not pulling out too much from the business, but not leaving so much in it that you yourself are not protected against any kind of either financial headwinds or risks that may arise. This is just kind of more those study results. So a number of people weren't really sure when they were able to retire, and probably some of that has to do with the fact that they have not really thought about their own retirement plans, or taken any money outside the business aside from maybe a simple salary. And you think about individuals that work at large organizations, or maybe you have in the past. There's retirement plans there. There's a variety of different ways, 401ks, simple SEP IRAs, profit sharing plans, pensions, etc. Ways that they're set up to retire. So just making sure that you have a more smaller or straightforward version of something like that is super helpful to making sure that you can retire someday, and not just planning to sell the business itself, because we never know kind of when that may come or how things will change that might impact the value of the business, and it could be to a person's detriment, obviously. As you can kind of see there, a lot of people had less than $500,000, which sounds like a lot of money, but if you're planning on having a 30-year retirement, that goes pretty quickly. So again, always want to see business owners making sure that they're protecting themselves and building out assets outside of the business. A couple of different ways to value the business. We kind of talked about this a little bit before with the maturity of value. Book value is just that. It's kind of assets minus liabilities, super straightforward. Market value is thinking about if you do have equity, it's kind of a number of shares times the share price for more publicly traded stuff, but really kind of what that including the equity component of it. Some of the others are getting a little bit more complex when it comes with, calculation of those, discounting your future cash flows, what you would get if you had to liquidate the business. All of those are going to be slightly different valuation amounts. As far as for you as the business owner, that last one, that income replacement value, is probably the most important when it comes to thinking about yourself outside of the business. And we'll get into that one a little bit more in just a minute.
All right. What is the most important valuation method? The Rolling Stone said, you can't always get what you want, but if you try, sometimes you get what you need. And I think that fits this perfectly. And so my write-offs as a financial professional are totally different than my write-offs from owning my Cubano business. But there's a lot of incentives I get from both of them that when I get out of both businesses, I won't get anymore. And this kind of goes over a little bit of that. There's a salary, a pension profit sharing, employee benefit programs, insurance, super important insurance, company paid car, travel, meals, etc. Other benefits paid, not listed above, stock options. So these are all things you're not going to get anymore once you sell the businesses. And it's really important to plan for that. Like me, I have two different types of write-offs right now. So like there's two ways I have to plan.
Yeah, absolutely. And we spoke about this a little bit before, but you will probably be collecting some type of salary or profit from the business, but all these other items, as you add them on and you continue to grow and develop your business, hopefully, those are going to be items that you need to think about, if you were going to potentially sell it and leave the organization, just so that you understand how your lifestyle might be impacted. And as we saw on the previous slide, they don't, about 72% of those surveys don't think or know how their exit would impact their lifestyle. And it's all of these types of items that really are going to be the items that would impact. And sometimes it's not really right there, right in your face. So like a paycheck. And so that's one of the things to just consider, exit strategy planning. So this is kind of looking at that from just a numbers standpoint, just with looking at those businesses themselves. The business may have this assets minus liabilities, that book value of X dollars, but really when you think about it, of all of those items that are running through the income statement of the business are all of those additional benefits that may not show up on the balance sheet of the business, but are providing you and the organization a ton of value. So it's figuring out, okay, if you're planning on leaving, how would you figure out kind of mapping or funding that gap? And so this slide is talking about the changing shifts in how we think about business valuation. So kind of that old style is, just understanding the value, knowing that there's a couple of different, or excuse me, like knowing what the value is and knowing that there's things outside of the math behind it. And just thinking about it, from a lifestyle branding standpoint, and making sure that you're adding in those items that are tied to that why, or kind of emotionally connected to kind of the more new approach is just understanding what the value is and what's driving that value, like we talked about, with making sure you understand your metrics and how to build upon those, because knowing that is a huge item to continue to utilize so that you can grow and understand how you want to increase the business, if that's what you want to do. And looking at the organization's overall value and figuring out how you need to change or continue to work on improving things to accelerate and drive that growth. And then, as we referenced earlier, just those intangible assets of the value of the brand, and making sure that you're continuing to build upon those and be visible in your marketplace for your customers and those in your network, really kind of can help build that value. And those items, if you were planning to sell or maybe bring on a partner, having a huge kind of brand value that outweighs, just the simple book value of the company is a great way to make sure that you're getting paid what you deserve for all of that sweat equity that we talked about putting in early on. So that was our presentation around, obviously leading, growing, and developing your business, and then why it's important to value it, understand the value, and then what you can do with it. A lot of different things or options provided by, having access to that information and accurate information is really can obviously do some incredible things for you and your organization. So just wanted to open it up to see if anyone has any questions. I don't see any in the Q&A, but wanted to provide some time now that we have probably made you feel like you're drinking from the fire hose, but wanted to see any thoughts, questions, or anything like that from participants.
Yeah, I just want to add real quick, I didn't get where I'm at today by just not asking for help. And I just want everyone to remember, like, no questions silly enough. Always, if there's something that pops, you're not thinking of it, you go to bed, you think of something, just, ask for help. Like, I'm always calling the owner of the gauge. I'm like, what is the tax liabilities for this? What is this? Then he refers me to someone. I'm always calling Morgan. I'm all like, hey, because Morgan's super talented. I don't have the answers for everything. I'm like, how do I do this? So remember, like, ask questions, ask for help. You can't do it alone. And I remember when I did the Google presentation before COVID, Google came in and she was like, you have more power now on your phone than you ever did before. And it's like, that's just those simple things of like realizing your tools. And if you have any questions not related to the slides, just let us know.
Yeah, and just to add to that, props to all of you for attending and going through something like this. So many people just kind of sit in their day jobs hating their lives. And it really takes a courageous person to kind of go after something that they want to achieve and, put their kind of flag on the ground and go after something like starting their own business. And, hopefully we brought some value to all of you, and you gathered one or two things at least from this discussion. And I think that's the important thing. Maybe, going to things like this, you're not the whole thing isn't going to necessarily be of value or add to you, but if you can pick up a few items that can help you or develop you, always super important to continuously learn and do that. Okay, so question. Having a brother who has a convenience store, but it's not very book smart person, but definitely is an entrepreneur. Doesn't do any bookkeeping, always in need of capital, and doesn't really have a business plan. So what would be suggestions for someone who's like that? Yeah, and you kind of answered it. Definitely needs some mentorship. I think, programs like this are incredibly helpful for an individual like that. And it might be like a business coach or a partner, someone that thinks in that way, that is a bit more, detail oriented and documentation driven, that he trusts, and either he trusts, from a partnership standpoint, or maybe it's someone that he has to pay. He's just a doer. Totally fair. I definitely understand and know the type, and in those situations, it's always like Paul was alluding to, and I definitely do, is having those people in your network that you go to for those skills that maybe you're not the best at, and recognizing that you do actually we all have shortcomings, right? Like, you can't be great at everything. So there's certain things that I know that I'm not great at, and I have other people on my team or mentors or coaches that I go to, whether that be informally or formally, to make sure that I kind of am covering those areas. I think the school of thought on that as well is kind of not being a jack of all trades, but really skilling up on what you're good at, and then Yeah, so it is tough to kind of be that. I think, sorry, to be the person that's helping from that standpoint. I think then kind of going back to what we said earlier is the why. Why does he kind of do, and why doesn't he see any value in some of those items? And so trying to help him understand why those items are important, uh, and how they might be helpful, why the business could be more successful potentially. I'm a very like data driven person. My previous job before this was very much that. So, but when you're, operating with someone that's more of just very action oriented, you need to get into kind of the emotional side of it and present to them in a appeal to their emotions and their kind of the way that they think and operate, and try to help them understand why some of these items might be important, um, and then communicating to them in a way that is valuable for them. So if they are a doer, it's just okay, bullet point, bullet point, bullet point, but we need to have the information behind this so that we can understand a little bit better on where the business is going, and if it's how it's profitable, and how to make sure that it can continue to do so, and be and grow in the future. Perfect. Any other questions for anyone?
So much for presenting. We appreciate your time, and I hope everyone has a nice and safe weekend.
Awesome. Thank you again, Geraldine. On the screen is our information. If anyone wants to grab, just do a screen grab of that. Definitely feel free to send us a note, or give us a call. We're always happy to help answer any questions or just chat. So thank you, Geraldine. And like she said, hope everyone has a great Friday and great weekend.